themselves.
Definitely, look at the numbers.
Absolutely, you're seeing an expansion on the margin front. You're seeing an expansion for Jaguar Land Rover's margins as well. So what really is the issue? We'll talk about that with the guests that we have on the show in just a bit. But let me go across to our automotive analyst. We've got Puneet joining in to give you some perspective as to why the street is looking so negatively at Tata Motors right now. Puneet, what are the reasons that you picked up?
Yeah, thanks for that, Alex. So stock down roughly 8 to 9%, eroding a market cap of roughly 27,000 crores. And there were 5 key reasons, according to us, that led to this fall. The first one is that the company does not see any kind of incremental growth in its passenger car sales for the next financial year. The company has said that over the past 2 years, the segment has been really strong. And going forward, they are seeing some moderation in demand as well. They are seeing that this is also due to a sharp run-up post-COVID for the need of personal mobility, as well as the EV trend over the last 2 years has been really strong. So going forward, they are seeing some demand momentum to be slow. The second reason we could think is the Jaguar Land Rover, the projected sales for the next financial year is really just like flat. According to brokerage Elara Securities, they see just 2% growth in sales over the next 2 fiscal years for Jaguar Land Rover, since it's going into a transition and getting newer models as well. They see also that the competition such as Mercedes and Porsche in this particular segment that compete with them globally will be also a key problem. The third one we see is the commercial vehicle segment, which has been strong for Tata Motors this year, but going forward they see that due to elections, the first half will be slow, while any kind of recovery is only expected in the second half of financial year 2025. The fourth reason we see is the order book for JLR. It's declining to roughly 133,000 units and has declined from the previous quarter by roughly 10 to 12%. They also see that, for going forward, the volumes will be flat for this year, as we mentioned. And also on the investment, they are going to spend roughly 3.5 billion pounds in financial year 25, which will lead to negative free cash flow for the company as well. And finally, the post-FAME environment. Now, do know that the FAME 2 scheme has ended on March 31st, and now we are in the new EMPS scheme, where the subsidies have been reduced by roughly 50%. The company highlighted in the conference call that they will be seeing the trend, how the buyers are reacting on the lower incentive schemes. But overall, we see that these were the 5 key reasons which will be a key problem for the company going forward, and that's kind of reflecting in the stock as well. Back to you.
Absolutely. Thanks so much, Puneet, for wrapping that up for us. If you look at the year to date, and I'm talking about 2024 itself, the stock is still up over 20% despite today's drop. But let's get our expert. We've got Sameer Dalal from Natwarlal and Sons joining in, and we will soon have Rajesh Palvi. Okay, we already have Rajesh Palviya joining in. Thank you so much, gentlemen, for taking the time, and good morning to you. Sameer, I'll come straight to you on Tata Motors. Hopefully you've heard what my colleague had to say about what he thought the key reasons were. What do you make of it, though? And would you say that this is enough of a drop to contemplate getting into the stock if you don't have it, or averaging your cost?
So good morning. So let's first talk about the results. The results were really good, right? Let's avoid the fact that they had the deferred tax write back. So even if we eliminate that, the profitability was extremely healthy. This is on the back of volume growth. You see, the operating leverage for the company played out. Now, 2 things you got to factor in. One, the management has given a slightly subdued guidance, saying that growth may be a little tapered in the current financial year. And maybe, in FY26, we might see some amount of better growth. But if I look at it on an overall basis, when a company delivers such strong operating margins, and even if I expect vehicle sales to be relatively flattish, I think the profitability will still remain there. It may not grow at the pace that probably the market wants to grow. So that has been one of the reasons the stock has taken a knock, given the fact that growth will slow down. But even when I look at it compared to other players, valuations are cheaper, but they had moved up quite significantly. So, it was kind of like, you can say the stock was priced really well. And, given the fact that people are expecting slower growth, the stock has come off. Now, my personal take is, yet valuations are not very, very attractive, where I would say that you can go out, go and say, even after this 7-8% fall, go out and buy the stock right away. I think you will get opportunities. You might see, 1 or 2 quarters where numbers come a little subdued in the fact that sales numbers are lower or flattish, and that could probably pull the stock down closer to the 850 odd levels. At 850 levels, I would definitely be a buyer in Tata Motors. But for the time being, given the fact that the guidance given by the management is not very positive, there's no real trigger to pull the stock up. So whether you're an investor or a trader, the near-term upside to some extent may get capped, but on downsides from a long-term investor, I would definitely be a buyer.
Okay, fair point. All right.